Hey, what's going on? Welcome back to my channel. In this video, we're going to be doing an update on Bitcoin. I do want to say that I'm not a financial advisor. You should do your own research before investing money into crypto. So taking a look at the weekly chart here, you can see that from the top in November 2021, we had a very nice 1 to 5 Elliott wave structure. We bottomed out here in November 2022. And I'm going to show you all the support levels that we were targeting during that time, because we were covering this on our Patreon, we were covering this on some of the videos that we were doing on Bitcoin at the time, and we clearly covered 16,800 as a very, very plausible support level, and then we also covered $14,000 as well as $12,000 as the potential bear market targets. Now, obviously, one of those was met, and that was 16,800. That was a perfect entry for us, and from there, we're up 271%. Right now, what we're doing is we're potentially in a wave 3 of this 1 to 5 Elliott wave structure. So we have a wave 1, a 2 corrective, and then an impulsive wave 3. Obviously, wave 3 is always the biggest wave of the 5 waves, and then you have another corrective wave, which is wave 4, and it should not go lower than the wave 1 high. In that case, it would be invalidated. But the wave 4 is obviously a corrective wave, and then you have the blow off top, which is hopefully going to be wave 5, and that is potentially, in my opinion, going to take us to $150,000 to $200,000. Now, with the way Bitcoin has been moving, this is really unprecedented, because we've never broken above the all-time high before a halving. And we'll take a look at different Bitcoin charts here. I don't want to stretch out the video for far too long, but there are a few interesting points to cover here. So the first one obviously is the bullish cross on the weekly chart, where the 20 EMA crossed above the 55 EMA, and that was a major bullish signal, and that's the signal, or one of the signals, that we were looking for on the weekly chart. This was your bull market confirmation, and the bearish cross in March 2022 was your bear market confirmation. Just like back here in 2019, you had your bull market confirmation in May 2019. Of course, this here was a black swan event, so you can kind of ignore that, but still, we did have a brief bearish cross and then a bullish cross soon after. So essentially, it was supposed to play out like this, but we had a bit of a black swan. So you can count this as your bullish cross confirmation of the bull market, and then you had a similar one here in June of 2023. Now, after that confirmation, it took us approximately 896 days to print a top of the next cycle. Now, if we take a look at this here and we go 896 days, that's going to be approximately March 2026. So I don't think the bull market is going to stretch out that far, in all honesty, because the way we are pumping right now, this could either be a very, very quick bull market. What I mean by that is that we're not going to be pumping into the latter stages of 2025. We could possibly peak out somewhere at the end of either 2024 or in the first half of 2025, which is what I'm leaning towards. Now, we could also go and stretch out the ruler from the second bullish cross in 2020 and see how many days it took to print the bull market top. Because effectively, you could say the bull market started from April 2020, because that's where we got the bullish cross, and that was essentially the end of that correction. But technically speaking, it was May 2019, so that's 567 days. So from this point here, 560 days would take us approximately to December 2024, which falls in line with this bullish cross and the all-time high there. So that is the first indicator telling us that we might have a nice peak at the end of this year. The other indicator that I want to look at is going to be on the other chart. So switching over to the weekly chart, this is a chart from Bitstamp. Now, we have a Fibonacci retracement set up from the bear market bottom in November 2022. And we also have the all-time high from November 2021. So essentially, this fractal here gives us a target at $156,000 by the end of this bull market. That's what we're going to be looking for. And from where we are right now, that is only 150% for Bitcoin, which is, it doesn't look, it's not that much, right, in terms of percentage. But of course, Bitcoin is a very, very expensive asset. It's a very big asset. So it's going to take quite a while for us to get to 156, in my opinion. If we do get to $120,000 in 2024, then I will definitely be taking profits on my altcoins much earlier, because of, you know, I don't want to ride the bear market wave down here like a lot of people did in 2021. So this is the first target, the major target, I should say, we're going to be looking at. Now, the minimal target is going to be $96,000, which is the 1.272. And then you have $117,000, which is the 1.414. Now, if you take a look at historical data, you can see that every single bull market we've retraced to the 1.618 at least. In some instances, we have gone even to the second fib level. Now, can we get to $266,000? With the way things are playing out right now, I'm going to say that that's actually even possible at this stage, right? When we were down here in April last year, I wouldn't be expecting $260,000. But the way things are playing out right now, that very well could be a possibility. But of course, I'm not going to be holding all of my altcoins until we get to $260,000, because that's going to be extremely, extremely risky. So that's another indicator that you could be looking at, the Fibonacci retracement. Now, the next chart that we have here is also a weekly, but in this case, we have a channel up pattern. And if we zoom in, you can see we had the most recent touch over here in November 2022, which also lines up nicely with these touches that we had back in 2019 and 2020. And from that touch in November, we've been on a roll ever since. And we're not looking to stop anytime soon. If we're going to be targeting, let's say, December 2024, we're looking at approximately $230,000. And what I mean by that is that we are in a channel pattern, right? So the logic is that we should touch the top of the channel by the end of the bull market, because the 2018 bull market peaked out at this green trend line. The 2021 bull market, which was a double top bull market, had a peak both times at the green trend line. And that's why this idea of reaching the green trend line is what we're talking about here. So by the end of the bull market, the idea is that we should touch the green trend line. Now, that's going to take us above $200,000, definitely. Unless we go super parabolically and, you know, in April, at the end of April, we're already sitting at 200K. That would effectively be a massive blow off top, and I'd be selling everything at that point if we did that, of course. But that's not the case yet. We'll see what time tells us, because time will tell everything. As of right now, this is just pure speculation. You can see how things can drastically change. And this is just another pattern for you to look at and to kind of have on your charts, because when we indeed do reach that green trend line, if we do reach it, and you see this, that's going to be a major indicator for you, because you have already 3 historical data points that are telling you that after that point of contact with the green trend line, you're going to see a crash. And potentially that crash is going to take us down to, you know, whatever the next bottom is going to be, potentially somewhere around $80,000 to $50,000, who knows. But the idea is that we're staying in this channel up pattern, right? So that's something else you can look at. Now, if you go to my Twitter, you can see that December 8th, 2022, we had this post over here. BTC prints the bottom 400 to 500 days before the halving. Based on the previous 3 scenarios, we printed a lower low since the last halving post, and now we are 457 days away from the next halving from the low, expecting Bitcoin to move up after spring. Now we go to the screenshot here, and you can see we have the first halving, the second halving, the third halving, and the fourth halving happening in April this year in a few months. And you can see the distance between the bear market bottom and the halving is roughly between 400 to 500 days. And when we got that, capitulation in November 2022, it was 457 days away from the halving. So that's why I expected that to be the bottom. And if we go to this chart, this is not this chart. If we go to this chart, this is the exact same chart that I had back then. And you can clearly see that once we get closer to the halving, we have a rally afterwards. But in this instance, we're having a rally before the halving. So one could say possibly we might see a massive rally after the halving, which is going to take us to a massive parabolic move. So we don't know essentially what's going to happen. The supply shock is starting to kind of print a picture for us, because yesterday more than 10,000 Bitcoin were bought by corporations, right, through ETFs, and only 900 Bitcoins were mined by the miners, which is going to be halved after April. So that's the halving. The amount of Bitcoins produced by miners during a 24-hour period is going to get halved, slashed by 2, and it's going to go down to 450. So there will be less supply and even more demand. So this is an interesting thing, and this is an interesting kind of chart that we used to predict that this would actually be the bottom, that somewhere between 400 to 500 days, that's where the bottom is going to be. And during that time, we were heavily buying into a bunch of different altcoins. Now, another thing for you to take a look at here is the fact that we have 3 Fibonacci retracements. Now, we go back to the 2015 cycle. So you have this is actually on the weekly. So let's switch to the weekly. It's going to be easier for you to take a look at this. So we have the bottom in January 2015 and the high in December 2013. So we print a local top here, June 2016, and we get rejected from the 786 Fibonacci, which was $717. So we have a nice retracement from there, right? We have approximately 40% pullback. Then we go to the 2019 cycle, right? The 2017 rather peak, and the 2018 December bottom. So we print the bottom here. That's the all-time high at the time. And once again, we run into the 786 July 2019. From there, we have a 72% correction. If you count the black swan, without the black swan, that was like a 53% correction. Now we go to the current cycle, and you can see that we have the 786 sitting at $48,000. And if you take a look at this, we did not really see a pullback, right? We did see like a 20% retracement, you could say, right? You do see this swing here, and we went back down like 20%. So this wasn't the typical 40 to 50% retracement, which goes to show that things might be playing out differently this time around. Things might be playing out differently this time around, and you have to be ready for that. You cannot necessarily use previous historic data points to predict the future. History doesn't repeat, but it does rhyme, certainly. So I hope you were buying throughout this bear market. I hope you were accumulating Satoshis and altcoins. We certainly have been doing that, especially with our altcoins, and some of them have already done 30+X, and hopefully you've had some nice gains as well. And if you haven't checked out my Patreon, that's where we have a lot of low cap gem calls, and we're still buying into some low caps that can potentially do 50 to 100x during this bull market. And feel free to check that out. You have a 7-day free trial. So I gave you the 3 points, the 3 really resistance levels to look for during this bull market, and at each level, at each resistance that Bitcoin runs into, you can take profits from your altcoins. That's a very nice strategy, but of course, I'm not a financial advisor. Now let's switch back to a different chart that actually we used to predict the bottom. So when I say predict the bottom, right, you can't actually know where the bottom is going to be, but you can have a few levels and anticipate where the move is gonna take us to. So we had this Fibonacci retracement set up from the all-time high in November 2021 to this bottom in June 2021. So essentially what happened is that we lost the June bottom, and which was a year later after the actual June bottom in 2021. So a year later, we lose the support, and then we have these extension levels that come into effect. Because once you break below the first fib level, which was 28,500 or 28,800 rather, you have the extension levels to target. That's exactly what we did. So we met the first level, we met the second level, and then we met the third level, which was the 1.618 at 16,800. We did have a few other targets based on previous touches. For example, we had this level over here, which was at, let's see, this was $19,000, right? Then we had this level over here at $12,000. And then we had this level over here, which was $14,000. Based on all of these points of contacts, we had all of this drawn out way before we actually dropped there in November 2022. So we knew this was a really good buying point, and we were ready for a further pullback down to even $14,000 or $12,000, which at the time were looking very plausible, right? When you're in this bearish state. But obviously that didn't happen, and you know, whoever got in, got in. Right now, they're reaping the rewards, and hopefully we'll have a fruitful bull market, and hopefully you guys enjoyed this video and you learned something useful. If you have any questions, let me know. Let me know what you think is going to be happening with Bitcoin, because it's really interesting seeing how the space flipped on its head from bearish to bullish, and now everyone's an ultra bull all of a sudden. And yeah, it's really interesting. Stay safe, everyone. Let me know if you want to see more Bitcoin updates in the future, and have a great day.